Now let's invite the management of Senco Gold and Diamonds. Very strong Q3 numbers. The company's top line went up by 50%. There was a margin expansion to more than 13.2% with profits of 264 crores. Suvankar Sen, MD and CEO, Senco Gold and Diamonds, is now joining in. Mr. Sen, thank you very much for joining in. What was the buyer? What was the volume growth in Q3? And can you give an indication of how Q4 has been, the first half of it?
See, the volume growth that we have seen in Q3 has been around a negative of 3 to 4%. And in terms of diamonds, we have seen a volume growth of about 10%. So when the gold prices have gone up, we've seen that the consumers are trying to, buy gold, buy silver, buy diamonds, but it's not fitting into their budget. As a result, we're seeing a little bit of a pressure on the volumes. But in terms of value, we've seen that with the gold prices being record high, we've seen an amazing growth of about 50% all in all for the Q3.
And Q4, what is the indication? What if there is no price growth? Prices remain where they are and buyers, the volume growth continues to remain under pressure, flattish or negative. What kind of growth should we expect in Q4? What are you going to end the year with?
So I think that, we've already been in the midway of Q4. And the prices are, more or less stable. So we are seeing about a value growth of 25 to 30%. So I think that, people are getting adjusted to the higher gold prices. Volumes overall are under pressure, but as a company and as a brand, we are continuously focusing on creating newer designs, making jewelry which is fitting to the budget, looking at lighter weight jewelry weights, and also 9-carat, 14-carat jewelry, which makes the overall price of the product lower. So these are the strategic ways in which we are trying to make up for the higher gold prices.
Okay, but you do see 25 to 30% kind of growth in Q4. Can you quantify the inventory gains on the unhedged gold in Q3 and what should we expect in Q4?
So see, I've been saying that, in this high gold price volatility, we've tried to balance between liquidity and the managing of risk, having a very prudent hedging policy, and we've kept our hedging ratios in about 55 to 60%. So in Q3, especially with where we get the highest ever sales. So if we look at the last 3-4 years performance, usually the Q3 gives us an EBITDA of about anything ranging between 9.5 to 10.5%. Our this particular Q3's EBITDA has been about 13.2%. So you can attribute about 2.5 to 3% due to the lower hedging and the gold price increase. Remaining 9.5 to 10.5% that we see from the business. We've seen higher sales in diamond jewelry. We have our company-owned, company-operated stores selling more than the franchisees, which is adding to the margin. Overall, we have seen that, the offers and the schemes that we've been running, in spite of giving a discount, because the gold prices have gone up, the making charge percentage overall has stayed the same, but in absolute numbers, that has helped the company to grow. So all in all, I think that about 2.5 and 3% is what we can see, given because of the higher gold price.
And how much does silver account for in your sales in terms of unhedged gains?
Silver overall in the business, see, we've done about 6,400 crores of turnover, but silver is about 1 to 1.5% of overall sales. So that would not really add a lot to the overall, profitability. Maybe 2-3 crores here and there, but that's about it.
You also acquired a 68% stake in Melora. This, I think, close to about 68 crores was the outgo. You also have presence in luxury leather, lab-grown diamonds via Sense. What is the contribution of the non-jewelry business and in Q3 as of now, and how much will that inch up to?
The non-jewelry business is still with a very long-term strategic focus that we are building on. We've been always a brand on jewelry, but if we look at the evolving consumer market, the modern generation, the Gen Z millennial customer base, for them, jewelry is an accessory, and we need to come up with various products so that we fit into their lifestyle, their thinking, giving them an option to buy, to gift. So that is the way in which we are looking at these various options of leather, perfumes. And if you look at the numbers, it's still very low. We are building the network, we are spreading ourselves, but it would be much lower than 1%. Lab-grown diamonds, again, as a complementary aspect to the studded diamond jewelry that we have. I think that it has a great future. Gradually, it will keep growing more and more. And as far as the Melora aspect is concerned, again, we can say that we are a 88-year-old brand with a strong legacy and trust. But how do we continue to make new designs, connect with the young generation? And it is with that strategic focus that we have, acquired the stake in that company. And I think that with the digital omni-channel aspect of it, in the future, it will play a very strong role in acquiring new customers and growing the companies in the young generation base.
Your studded ratio was 10.9%, I think, in Q3. How much does that number go up to, say, by the end of FY27?
See, our aim is that in the coming year, we should look at about 12.5 to 13% in the studded ratio. I've been saying for the last 2-3 years that our aim is that 15% should be the overall studded ratio. Yes, in the last 2 years, the gold prices have moved up so much that in spite of the growth in diamond jewelry sales, the studded ratio continues to remain at about 11. So once the prices stabilize, consumers get used to it, I think that we should look at about 12.5 to 13%.
Thank you, Suvankar, for joining in. Always great chatting with you. That is Senco Gold. For now, the value growth continues to remain very intact, 25 to 30%. That's the guidance. Volumes, though, in Q3 have declined by 3 to 4%, at least on the gold side.